Well, good morning, traders, members, and visitors. Lovely to do this video for you. Let's have a look at dollar index. Guess we should always start with the dollar index. And a little bit of hope here. We've just moved up. So we've broken above this, I suppose, intermediate resistance. We've still got this level above us at 102.60. Which is a pretty key level, and we're also at the 20-day moving average on dollar index. So we want to see that push up through there, but so far so good. And after we saw that move up through and holding above resistance yesterday and support, I'd say holding above resistance and support. Actually, so there's the support, the red line. Resistance is at this line, and we held above support and resistance. And today we've continued that move higher. So far so good. Remember, we're looking for a move back up to maybe 105 if we're lucky on dollar index, and that would be a good, sensible retracement for the dollar. In the overall, what we have to say right now is an overall downtrend and a potential move much lower for the dollar against the major currencies. Now, the major contributor to the dollar index is the euro, and we're short on the euro, as you all know, if you remember. And you've been following the trades. We've broken through the channel bottom. So that's the first step. So yesterday we saw an attempt to move higher. We had so much European information, data, economic news that came out, and there's a lot more today. So we'll be eyeing this one very carefully. I'm not going to go through all the data now, but you can go and have a look at myfxbook.com or FX Street or wherever you get your data from. Barcharts.com. There's all sorts of places you can get it. Have a look. There's just a plethora of European economic data coming out today, and some pretty key ones, but let's not talk about that here. Fact is, we've broken down through the channel line. We want to hold beneath that blue line today, and we want to get below this 20-day moving average and the screen support line, and this is at the key level of 107. Well, let's call it 107.80. If we can close beneath there today, that would be a very good sign for a short on the euro. And if we're looking for a 2 or 3 or 400 pip rally on the dollar index, or percent rally, that should be, let's call it a 300 pip drop on the euro, which should take us down to at least 1.06, which is where the 50-day moving average is in that region. That would be a great outcome for euro shorts. So let's see how that goes. And we're short on the pound as well, same sort of thing, and these are all going to follow suit according to the dollar index. You can see the support lines for the pound just beneath us. Our targets will be 1.22 and then maybe 1.2, which is more or less where this 200-day moving average and this green support line. So that's 1.2. First of all, we're going to get through and close beneath 1.22. So those are the kind of targets. We won't be doing this all in one go. So we'll be exiting trades, reselling on rallies, exiting and reselling and so on. Because even though we try to swing trade, it's kind of a hybrid between day and swing trading that I do. So we've got a direction. Let's say we're busy trading the pound short. We'll be looking to exit on surges downwards, close some or all of those shorts, and then wait for a bounce, a retracement, a rally, back up again, resell, exit on a slightly lower low, and so on and so forth, rinse and repeat until we get to the bottom of the downtrend, which I expect will be maybe at 1.2, 1.22, anywhere between 1.22 and 1.2 is where we're heading on that, hopefully. Australian dollar, same thing, and there's no point in going through all the others. The one that's worrying me the most, actually, is Euro CAD, and I would have expected Euro CAD to hold beneath exactly where we are now. We're just probing up to 145.65, and I really don't, ideally we would have actually stayed beneath 145.30 or 20, but we've got up to 65, and that's probably, it's just a little bit too high for my liking. However, if we draw a Fibonacci on here, remember this has been trading from the 786s. We've seen it. Have a look at some of the previous videos, and the 78.6% Fibonacci retracement level, or just the 786, is a pretty key number on Euro CAD and has been for some time. We've been trading off the 78.6 for on 3 occasions now, not only on the daily chart, but also intraday. And we're at the 61.8% Fibonacci retracement right now, precisely on it. With a bit of luck, that'll hold. Our stops are just above that, but we'll resell if we get stopped out, potentially. But here's the 78.6 at the round number 1.46. So I'm still looking for this to short. Remember, we've got this beautiful tweezer top on the daily chart, and we had a look at this on the weekly chart as well. It's a fantastic weekly tweezer top right there, and this, with a bit of luck, will hold. And so we've got 2 lines in the sand right where we are at the moment, 45.65, and then we got 1.46, 4,600. Okay, so those are the 2 levels on Euro CAD. This tweezer top, bearish engulfing weekly candle is very convincing, and it's against the 200-day moving average right there, and against this previous resistance. We switch back to the day chart. You can see again, there's the tweezer on the same thing on the day chart. Not only is it a weekly tweezer top, it's a daily tweezer top, and that daily reversal candle, big bearish engulfing candle, and we've just retraced back up to the 618. We could get to the 78.6. We'll be watching that one very carefully. I still like it very much for a short. Those are the levels to keep an eye on. And let's get rid of this. I'm having some problems with internet connectivity. I'm not going to talk about the other CAD pairs right now. Aussie yen, well, this is behaving beautifully as it always does, or has been recently. I'm not going to say it always will, but so far so good. We're short on this one. We've still got 1 full position left, which represents 50% of our original entry position, which was up at the top here against the moving average. That's the 100-day and the 200-day channel top Fibonacci retracement. Beautiful entry. And then we had these reversal candles, tweezer tops abounding. Just a fantastic trade, really. We're still in this. We've got half our position left. We're aiming for the channel bottom and where that intersects this green line. And that would take us down to about 90. And then if we can get through there, we want to get down to 87. If we can get through there, then we want to get down in towards the 80. So this is a continuous sell. Exit, sell on the retracement, exit, sell on retracement, and so on, as we work our way down, potentially towards the 80 level. That could take a while, could take a few weeks, but that's okay. When it comes to stocks, well, we've got this upward trend line on NASDAQ. We were so basically I'm just scalping these equities indices at the moment. We've been selling and buying both directions, and winning quite a number of nice scalps. If we get down to this trend line today, I think at the open we might try this long again, a bounce off that trend line. Perhaps we might get down to this red line at 11,800. It's been a key level for a long time. I think that would be great. I don't know which direction these are going to end up going. I don't think anyone does. We've got Fed speak tomorrow. Interest rate announcements. Jerome Powell's going to blather on about we're not stopping yet. There's still work to be done. Jobs are still hot. The economy is still good and strong, and there's work to do. We've got to get inflation down. Target rate's 2%. We're not going to rest until we get there. And I think he's going to come out a little bit stronger. And the big surprise will be if we get a 50 basis point increase. I don't think we will, but you never know. Same thing on S&P. We might start scalping. Actually, if you're trading this now in pre-market, this is a good level to look at, perhaps trying for a little bounce. But in terms of overall direction on these, there's no point in picking anything until we hear from the Fed, we hear from Jerome Powell and what he's got to say, and we see what the jobs numbers are like at the NFP, 8:30 a.m. Eastern Time on Friday. And then when it comes to gold and silver, where we're short silver, that's going well. We didn't remain short on gold. We've missed a little bit of a trick there, unfortunately, but we are in silver. And silver has broken down beneath this support line. And remember, we talked about this dome-shaped, beret-shaped top against that resistance level, the top of the channel, and how we saw a lot of. There's a video. I'll put the link up at the end as well for this on silver and gold. But we had this constant battering up against that channel top not making any headway, and all the spikes, wicks, were on top of this movement, whereas on gold they were at the bottom. That's why we weren't too sure about gold. But definitely on silver, we saw all the wick highs at the top here, indicating that this channel line was going to hold, and it has absolutely beautifully. And we've now broken down for the first day in a week or so, and only the second time in a number of weeks that we've broken down beneath the support level. So that's all pretty good news for those who are short. I'm doing a video on natural gas, which I'll send out later on today. It's an interesting one, really interesting setup here. I'm going to be talking about these doji star candles. I'm going to be talking about these levels beneath us at $2.50 and $2.30, and why I don't think $2.50 is the level to watch. It's going to be an interesting one. Watch that. $2.50. If you're thinking of trading off $2.50, I don't think it's a great idea. I think there are better options on natural gas. Have a look out for that video and subscribe to this channel if you'd like to see that. And then, well, you should probably are subscribed because you're members, but I might send this out to the public because today's an interesting one. It's just before the Fed interest rate announcement and so on and so on. So there may be some people interested in what's going on here. And then sugar's gone up a little higher than expected. Still looking to perhaps add some more short positions on there. We'll see how that goes. Sugar's really very, very high. But we're only in small positions from about this area or just above there. But maybe it'll be worth, I've got to have a look at that one more closely. I don't know. Soybeans, we're waiting for move up there. If you're interested in trading soya, we want to get into that zone before trading soya. Bitcoin, I did put out a short on Bitcoin. Go and have a look for that on the channel as well. I think shorting Bitcoin anywhere around or below this level here at about 24,300 to 25,300, somewhere in that region. I think we got to just about 24,300. And yesterday's candle and Bitcoin, bearish engulfing candle, be careful if you're bullish Bitcoin. We might see a rally back up towards those highs and then a fall. So anywhere around 2,400 and above, good area to be selling Bitcoin. And then just the minor pairs, we're long on dollar South African rand, and we didn't manage to get into pound South African rand because it didn't drop back far enough. But I did put out a signal. Unfortunately, I'm actually not in this trade, but I hope some of my members are, because I said if it drops back down, we were long, we took profit, and I said if it drops back down to 1737, I'm going to re-enter. I put an order in to get in back long at 1737. With the spread, when it dropped there, it missed me by 1 pip, but I hope some of you got into that. And that's all for today, folks. So far, so good on most things, except for EuroCAD. As I'm recording this, it's dropped back beautifully. So let's just see how that goes. I still like it for a short. Take care. Have a great trading day. Remember, big day tomorrow.